This is Global Currency Insight, and today we're bringing you a story that has caught the attention of many people who follow developments in foreign currency. Imagine walking into your neighborhood bank, handing over a 25,000 Iraqi dinar note and being able to exchange it for US dollars. For years, this kind of request would have been dismissed, with tellers explaining that their banks did not accept Iraqi dinar at all. Yet recently, something has shifted within the banking system, and this change has opened the door to conversations about currencies that were once considered off-limits. In the next several minutes, we'll carefully examine why major U.S. banks are now processing certain Iraqi dinar notes, how this development came about, what it means for individuals who already hold this currency, and what steps are required to complete such an exchange. If you've ever wondered whether the dinar you or someone in your family has saved might finally have some use, then this story is for you. The new situation started quietly. A few weeks ago, one large American bank updated its guidelines for handling foreign currency. For the first time in more than 10 years, that bank began to accept Iraqi dinar in specific denominations, primarily the 25,000 notes issued in recent years. Shortly afterward, two other major banks followed the same path, and since then smaller regional financial institutions have begun considering or adopting similar policies. What makes this significant is not only that the dinar is now being taken in by institutions that previously avoided it, but also that it reflects broader adjustments in how banks treat certain emerging market currencies. It signals that banks are willing to expand their services when regulatory conditions allow and when customer demand makes it worthwhile. To understand why the acceptance of these notes matters, it's important to revisit Iraq's economic history. After the early 2000s, Iraq's currency experienced major disruptions. Older notes were taken out of circulation, and a new series was introduced. Even with this change, the dinar struggled for years to gain recognition outside the country. Many banks around the world, including in the United States, avoided processing it due to concerns about stability, legitimacy, and compliance issues. But in 2018, Iraq launched reforms designed to modernize its banking system, strengthen its currency's security features, and improve oversight. Those reforms, combined with Iraq's position as a nation with large proven oil reserves, helped create a foundation for gradual progress. Still, most U.S. banks remained cautious until very recently. The current change is tied to specific requirements. U.S. banks are not suddenly accepting every kind of Iraqi dinar note. Instead, they are focusing on notes from the post-2018 series, specifically those in the 25,000 denomination, and only when those notes are in excellent condition. Banks also require documentation and verification, including specialized machines capable of checking embedded security features. In other words, the new policy is not a blanket approval of all dinar, but a tightly controlled process for certain notes. This ensures compliance with anti-fraud measures and aligns with anti-money laundering regulations that govern foreign currency exchanges in the U.S. This raises the question of who actually holds Iraqi dinar today. The answer varies. Many U.S. service members who were stationed in Iraq at different times brought notes home as souvenirs or as keepsakes from their deployments. Some civilians purchased dinar through currency dealers who marketed it as a speculative purchase. In addition, some families inherited notes from relatives who had lived or served overseas. For years, these bills often sat unused in drawers or boxes. Now, however, those with qualifying notes have the option of exchanging them at certain banks, provided they meet the established criteria. For individuals considering such an exchange, the process generally works like this. First, it is important to call ahead to confirm whether the branch in question handles foreign currency exchanges. Not all locations have the right equipment or trained staff. If the branch does process dinar, customers are required to bring valid identification and in some cases provide information about how the currency was obtained. Larger transactions may trigger reporting obligations, as banks must comply with federal requirements to document foreign currency activity. Once the notes are accepted and verified, the customer receives the US dollar equivalent based on the current exchange rate, minus any fees the bank charges for the service. At this point, it's essential to talk about value. The Iraqi dinar currently trades at around 1,300 dinar per US dollar. That means a single 25,000 dinar note exchanges for somewhere between 15 and 20 US dollars depending on the day's rate and the bank's spread. For people holding small amounts, this means their notes can now be converted into dollars without needing to turn to informal channels. While this development is exciting for those who simply want to redeem their notes, it's important to recognize that the value remains relatively low compared to major currencies like the euro, yen, or British pound. There has long been speculation online and in some communities about whether the dinar might one day revalue significantly. Some claim it could reach much higher exchange rates. However, most experts caution that dramatic shifts are not something to expect in the near future. Iraq still faces political and economic challenges, including infrastructure needs and regional security concerns. These factors limit rapid currency growth. The acceptance of dinar by U.S. banks should not be interpreted as a signal of imminent large-scale revaluation, but rather as a procedural and regulatory update that makes exchanges possible under controlled circumstances. Still, the fact that American banks now handle these notes is meaningful. It shows that the currency has reached a point where institutions feel comfortable offering exchange services. This could encourage more people to bring their notes forward, particularly those who acquired them years ago and had no practical way to convert them. It also reflects a larger trend within finance where banks are more open to dealing with certain emerging market currencies as international trade and travel increase. Over time, this could set a precedent for other currencies that previously were not commonly accepted. There are some practical issues to keep in mind. Banks typically will not take damaged or heavily worn notes. Bills with tears, stains, or missing pieces are likely to be rejected. The requirement for the post-2018 issue is also strict, meaning older series notes will not be exchanged under this policy. In addition, there may be limits on the amount of dinar a person can exchange in a single transaction or within a set period. Some banks may also require the customer to have an existing account. Because each institution sets its own procedures within regulatory boundaries, policies can vary by location. For those who proceed with an exchange, tax implications may apply. If the dinar was originally purchased at a higher or lower cost, any gain or loss realized upon exchanging it into dollars could be subject to tax reporting rules. This is why it's advisable to keep careful records of when and how the currency was acquired, as well as the details of the exchange. Banks also keep records for compliance, so transaction details are documented at the institutional level. Beyond individual transactions, this situation raises broader questions about the role of physical currency in today's world. As digital payments and cryptocurrencies continue to grow, some might assume that physical foreign currency is becoming less relevant. However, the acceptance of Iraqi dinar by U.S. banks suggests that there is still a place for tangible notes, especially from nations that play a significant role in global energy and trade. People continue to hold, collect, and exchange physical currency, and banks recognize the demand for such services. From a banking perspective, providing currency exchange services can also strengthen customer loyalty. It allows banks to offer an additional convenience while earning revenue through exchange fees for customers. It provides peace of mind that their foreign currency can be converted safely and legally without relying on less formal channels. Together, these factors explain why banks are gradually opening their doors to more diverse currencies, even if the practical value of those notes remains modest. Looking forward, this development may encourage banks to expand their exchange lists further, possibly incorporating other currencies that were previously limited. The process will depend on regulatory approval, demand from customers, and the stability of the issuing country's financial system. Each case is unique, but the Iraqi dinar example demonstrates that shifts can happen even after long periods of exclusion. For now, the key takeaway is that individuals holding specific Iraqi dinar notes now have a legitimate path to exchange them in the U.S. banking system. This does not necessarily transform the dinar into a mainstream investment tool, but it does create options for those who already own the currency. Whether someone views this as an opportunity or simply as a way to clear out old bills, the new policy represents a noticeable shift in banking practice. And that is where we leave today's report. This has been Dinar RV News, covering the recent decision by U.S. banks to begin accepting certain Iraqi dinar notes for exchange. If you have these notes in your possession, you may want to check with your local bank branch to see whether they participate and what requirements they have in place. Every branch may handle things differently, so preparation is key. As always, we will continue to watch these developments closely and share updates as they unfold.